Now, South Africa's jobs crisis has been highlighted yet again during the first quarter. Total employment increased to 0.7% year on year as the country shared 74,000 jobs. Industries that cut the most jobs include trade, community service and business services. And joining me now to unpack the report in greater detail is senior economist Koketso Mano. Thank you so much for your time, Koketso. I think for me, it wasn't really a surprise to see a quarter-on-quarter decline because from how I look at it, the last quarter was December, and of course you expect employment there to have some sort of boom. But for me, what was interesting was the yearly decline, that we had less employment in the first quarter of 2024 compared to the first quarter of 2023. And if I remember correctly, we actually had more load shedding in 2023 than 2024. Can you make sense of it all?
Yes, and hello to all of your viewers. I think the issue here is we've had multiple years of very weak economic growth. And unfortunately, that has consequences in terms of, businesses' willingness to expand operations, right? Just beyond surviving load shedding, doing just the keep business afloat type of investments, right? You need more structural investments to take place in the economy. And that would be something that really increases capacity to a point where you need more employment. And unfortunately, in South Africa, we just haven't seen that over the past decade, right? And we're dealing with what we can call a lost decade. And unfortunately, the employment numbers broadly speak to that. I think if you think about the general climate and business confidence that has been weak for multiple quarters, it just speaks to that, I think, these numbers.
Yeah. Well, let's actually, take a look at the industries that contributed the most to this decrease. When I look at them, I mean, for example, mining, I can kind of make sense of it because of the price headwinds that we've seen, which have led to retrenchments there. But is there anything to note about, some of the other industries that contributed the most negatively?
And you're so right about mining, right? Because we're dealing with relatively weaker commodity prices. So that would be something that really affects that sector. And I think there's also been long-term structural constraints in that sector as well that has been affecting, the output as well as the willingness to invest more meaningfully. And I think when you look at, in general, your primary sectors, right? So mining, agriculture, even when you move into the secondary sector, when you think about manufacturing, the utility sector, those sort of highlight to us as well the cost of these infrastructure constraints that we've been dealing with. Not only just load shedding, I mean, if you think about the ports as well, that also has an implication on business operations as well. So it might just also speak to that in terms of when you start thinking about the sectors that have contributed negatively. But I think also when we go back to some of the near-term considerations, as you've mentioned, that quarter-on-quarter we could have expected the slowing down. And I think primarily you would have expected it in trade, right? Because some of that festive season pickup is usually in trade activity. But what's interesting about that number is that, yes, we've had that quarter-on-quarter contraction, but it's not just part-time jobs. It's full-time jobs as well. In fact, many of the jobs that were lost in the trade and community services sectors were full-time jobs. So this is very concerning, and I think you're so right to position it in the within the climate that we find ourselves in, where there is still lingering political uncertainty. The seventh administration is still being formalized. So I think it calls, or it speaks to what citizens have been commenting on when you watch the news or when you read social media. Employment is a very big problem, and hopefully, we see these reforms taking shape so that businesses are more willing to invest structurally in the economy.
Yeah, it really does paint quite a gloomy picture when you look at the full-time employment versus part-time employment, because we know that there's a lot of part-time employment in the third quarter, but now for the fact that we've even lost full-time employment, which was more than the part-time employment, is really quite concerning. A surprise to me was that the positive contributors came from some of the industries that actually contributed negatively to first quarter economic growth, including manufacturing and construction. And you talk about these, structural headwinds that these industries have had. Is there something to get excited about there, or is it just even those positive movements can't really move the needle?
I think there's two sides to this coin. One is, always positive if people are getting jobs,
Yes,
right?
yes.
But it's very important that we don't read into very or point numbers, or just the
Yeah.
one release of data. It's very important to look at the structure and the trend of the data, which is why we tend to speak to longer term structural constraints when we look at this data. And I think the other thing that we need to remember is when you look at the business confidence survey that is prepared by the BER, it'll tell you that a lot of businesses are dissatisfied with conditions. But if you read into the second quarter outcome, it does also mention that a lot of businesses were holding off, having that wait and see approach, waiting for the uncertainty of the political climate to unwind. And maybe they might be willing to participate more. I mean, if you look at the financial market indicators, whether it be the rand, whether it be, equities, how the JSE has been performing, all of those suggest that the market is relatively viewing the GNU in a positive light, right? So hopefully that translates into employment, that translates into actual real economy gains, right? Not just a business confidence boost. So we're hopeful that, once this GNU is formalized and the political uncertainty subsides, we might start to see those positives. So yes, there's a positive story. People are getting jobs, even if it's just temporarily, but we're hopeful that, political outcomes will usher in more confidence within the state and more confidence within the economy.
Yeah. Well, one of the factors that consumers are also concerned about is money. And obviously that's, the earnings. You talk about this excitement, this optimism around the GNU, and we even saw with the stock markets, the retailers, their stocks climbing, hoping that there's going to be more certainty and kind of financial relief and economic growth finally, so people can actually spend. But actually, when you looked at the employment figures for quarter one, you did see a decrease in earnings. Was that just a function of the lower employment that we saw, or maybe is there something that we should be concerned about in terms of real income growth?
I think when you look at the trend, let me start off with that. When you look at the trend of earnings performance, right, from a consumer or household perspective, you will see that there has been a generally faster recovery in earnings than there was in employment, right? So that's number one. So wage gains or salary gains have picked up much faster.
Okay.
In fact, when you compare earnings to the first quarter of 2019, so before the pandemic, you will see that those are higher by nearly 40%. So there has been that increase in earnings. And if you want to think about how that has kept up with inflation, on average, inflation over that period is around 28.4%.
Yeah.
So there has been, general better performance in earnings. Now, when we go back to the loss of momentum, it could be a combination of one, inflation is not as high as it was, say 2022, 2023.
Yes.
So even the growth that you will get in earnings may just mimic that, right? The fact that how businesses, firms are passing on less increases in light of lower inflation. But it also just could be, on the other hand, when you flip the coin, the fact that businesses have been, taking a bit of a knock when it comes to profitability, right? Because inflation will also affect their profitability. Weak economic growth will also affect their profitability. So if businesses are experiencing that pressure, margins are coming down, it might also be a factor that they're pushing back on these earnings just to try and keep their finances afloat. So I think it's a combination of all of those factors and what you've also mentioned at the start.
All right. Well, thank you so much for your time, Koketso, and for making us smarter today. I really appreciate it. That was a senior economist at FNB, Koketso Mano.